spooked the markets as he left the door open to further rate hikes. Tell me something he hadn't already said already. That's what I want to know. He warned against the risk of being, quote, misled by good data. Speaking in a panel discussion at the IMF, Mr. Powell said he believes the Fed faces nearly equal risks of either raising its benchmark too high or not raising it enough. He said officials were hopeful of a retreat in price pressures, but wouldn't hesitate to raise rates if necessary.
The FOMC is committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. We are not confident that we've achieved such a stance. We know that ongoing progress toward our 2% goal is not assured. Inflation has given us a few head fakes along the way. If it becomes appropriate to tighten policy further, we will not hesitate to do so. We will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over-tightening.
So it was certainly those sentiments then from Jay Powell that moved the market, or the market was even looking for when it comes to the calendar expectations then on yesterday. But here's another piece of data that we'll unpack in just a moment or two. It was that 30-year bond auction that saw lackluster demand that then pushed those yields higher. The market then going lower then in the days of trading, a near 1% dip off then for the Nasdaq then in that trading picture, but still managing to hang on to some of the gains for the week due to tech stocks still managing to push a little bit higher there. Energy, the worst performing sector for the S&P 500 this week. It did go down 0.8% then as well in yesterday's trading picture. It's now down for the week, actually, having seen a number of days where it really struck a positive note. Then you see some fragility then in that uptick that we had seen for around 7, 8, or 9 days across the major indices. All 11 sectors were down in yesterday's trading picture, although the likes of Disney managed to gain 7% after those better than anticipated numbers. Onto the treasury front then, as I said, the ticking higher then of those treasury yields did come after that 30-year bond auction, so lackluster demand, plus Fed Chair Jerome Powell saying the job is not done yet. They are very encouraged by where inflation is headed at the present moment, but it's not enough to write off the chances of another hike from the Fed coming in. When that might be, how many times that might even happen is obviously of key question, and we'll continue to ask some of the analysts here on the show what their thoughts are on that. 4.626 at present then, above the 5-year still for the, above 5% should I say then, for the 2-year yield. Onto your dollar crosses then. So into the currency, we're taking a look now. It seems that there is some weakness then for the dollar at this state of